Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 5th of May here in 2022, and it's a precipitous day to the downside. Let's get started. Let's highlight some of the main markets, or at least the main stocks. We'll see them right here in our S&P 100 list, and of course our sectors along with the equity futures. But key thing to watch will be the bond market. So let's get started. In today's session, just an orientation, the S&P futures were down 3%. The NASDAQ took the biggest hit. It was down greater than 5%, almost at 6% at lows of day. Dow was off 3%, but 3% was at one point about 1,300 points in the Dow. And the Russell Small Cap was off 4%. Bond market down 2%. It was down over 3%. Of course, the key thing to watch, as we'll show, is that 10-year Treasury note yield pierced above and traded above 3%. So in that context, with higher interest rates spiking and the bond market falling, some of the main sources of downside activity in today's session were the tech names. Just to name a few, this is sorted in the S&P 100 by the biggest percent loss. Tesla, although Tesla is a retail name, right there with Amazon, it still would count in technology general, or at least the monsters of tech. Right behind that was PayPal. Netflix took another 7% down day, Nvidia, and then we'll skip into Facebook, Apple, and other tech names, and these will directly contribute right here to the XLK. XLK is a technology sector in general, but again, we talked about Tesla and Amazon. They're part of the XLY because they are consumer discretionary, or think retail names. This is a chart, or at least a market watch heat map, that you don't see every day. We don't see down days like this often, but this may be more common in that the equity market is in and continuing a downtrend. And if we do judge the NASDAQ by a 20% decline from high, it remains in a bear market. So this is where the stock market settled at the end of today's session. And tomorrow, we're going to have another volatility event. That is the employment situation, or as we call it, the monthly jobs report that take place on the first Friday of every month. Of course, the Fed raised their interest rate, their target rate, by 50 basis points. And we are seeing there was a bullish rally from that, but in today's session, that was all given away and more. But again, as we set the stage for the remainder of the session, coming up here, that's going to be Friday's jobs report, and roughly speaking, about 140 companies report earnings. Anything major ConocoPhillips reported today, nothing major on the docket, at least in terms of the S&P 100. Speaking of the S&P 100, which stocks in today's session made new 52-week lows? And these stocks will be continuing the downtrend in motion, and there's a big name we want to start our discussion with, and it's Amazon. Amazon shares tumbled again, 7%. We'll come to that in a moment, but this is a stock scan. It could be off your default or the load scan query coming into the public being the new yearly lows. So which stocks in the S&P 500 are making new 52-week lows? And the object is we can expect continuation to the downside. Mainly, I'll focus my trades and ideas in the large market cap stocks. So I probably would not be concerned or bothered or take any interest in trading some of the names on the low market cap names, but they're there for you to trade as well. But I tend to focus in the S&P 100 for swing trades, short-term positioning, and that will be listed and sorted by market cap. And that would include Amazon, Nike, Intuitive Surgical, and some of the others, eBay, Ball Corporation, Expedia, and down the list. Etsy comes in the list as well. Just looking at a few of them. We'll come back to the S&P 500, the SPX. Let's start with Amazon. Now, what we're looking at here is the weekly chart on the weekly chart on the right, and the daily chart on the left. This shows the earnings. So what we're pinpointing, what the stock scan is pinpointing quickly for us, is stocks that are pushing off to new 52-week lows. Amazon is the biggest market cap name, and the thing we want to start our discussion with, that continues to make the new lows after its earnings and is broken beneath the 2,400 per share level. It will have a split coming up in the summer, but at the moment, the share prices are trending and trading lower, not seen to levels since about the mid-2020. Nike is another retail name, and although barely, it did generate a new 52-week low in today's trading session. That takes it back to levels, price levels not seen since, again, back into 2020. Intuitive Surgical, same structure, same logic, although those price levels were seen at the earlier part of 2021. And a few others. eBay, a stock that continues a downtrend, technology name, and maybe all we'll look at. Here's Ralph Lauren, which is a retail company. It's more of a trading range, but nonetheless, it is pushing off to lows. So that is the stocks that are doing that. But what about our monsters of tech? Let's start there. Tesla had another new low, not quite a 52-week low, but it is in the context of a range between 1,200 and about 800 or 750 per share. Tesla was one of the leading names to the downside, actually the leading name to the downside in the S&P 100. Behind it was PayPal, and that is representing one of the severe declines from the most recent months. Again, the context at hand is with inflation going, the Fed aggressively raising rates, technology companies in general are going to be adversely affected by higher interest rates, PayPal being one of them. And that is pushing off to new lows and continuing this daily chart downtrend. Again, the thought process and the point of these scans is those stocks that are weak tend to get weaker. Or stated differently, stocks that make new 52-week lows, breaking support, 52-week low, eventually down to here, breaking support, 52-week lows, do actually tend and go on to make additional 52-week lows. Trade opportunities are selling, short selling, pullbacks, which would be in-out spreads or put plays on retracements back to falling averages, falling trend lines, or some other way you prefer to trade to the short side of the market. That's the purpose of those scans. Nike, we'll trade back to Nike, is a retail name, again, not necessarily seeing the same decline as other technology sector stocks. We'll look at Netflix. That's one right there with PayPal. PayPal did have its break, or Netflix, I should say. Netflix from 700 down to 200. And that is a major decline for that stock, a very popular stock. And nonetheless, a very well-known stock and very frequently traded stock. But just in a few months, the share price has gone from 700 to under 200. And that is a massive sell-off in this technology company. We just saw Amazon. We'll take a quick look at Nvidia. And Nvidia shares, it was off 7% in today's session. There are the new lows coming off in Nvidia, not quite at those 2020 or the pandemic lows as Netflix and others are, but it has fallen from 340 per share down to near 180. And Facebook, another one that has seen its share price get cut more than 50%. 50% haircut, as we might say. That's 380 down to really about 180. And we've seen that pull back and retrace after its earnings. And we'll look again at Apple. Not seeing it decline. In fact, Apple is showing relative strength, but it is at the bottom of its sideways trading range. Again, outside of today's session, as we sum up the day, sum up this decline in the stock market, the bond market pushed to new lows. It as well pushed to new 52-week lows and continuing its downtrend. Looking at TLT, which is a tradable ETF, but the same is true in the 10-year Treasury note, ZN, or the 30-year bond, ZB. That was a sharp sell-off in the 30-year bond. And we'll finish by looking at the TNX. So TNX, again, is our 10-year Treasury note yield. You can see the 5-year or lower, or the 30-year bond. But the key to watch in this is 3%. The 30 on the chart here represents 3% for the Treasury yield. And that is where the market pushed down from on the Fed. But today's session not only broke, but surged and traded up to 3.1%. Once again, that put pressure on the NASDAQ in general and pushed that index to a new 52-week low, continuing off the downtrend and the bear market, which means 20% down from the high. The NASDAQ at this moment is, roughly speaking, see the exact number, 24, almost 25% off of its 1700 or 17,000 prior high. As always, be careful and safe in this volatile tape. Keep your positions, keep the hedges as necessary, and be careful. The jobs report will take place tomorrow, and it could once again be another cause for market volatility. This is Corey Rosenblum with tonight's Theo video update for May the 5th, 2022.